Good day. We're so honored to host Rob McEwen, the chairman and chief owner of McEwen Inc., and Michael Medding, the managing director. Michael is the man who brought Stellantis and other partners into the Argentine copper project and is advancing the 4 billion or so project that's the labor of love, as well as the gold projects. And please bring us up to speed, please.
Thank you, John. Good morning, everyone. Just like to start by talking about McEwen Inc. Some people view us as a copper company and you get the gold for free. I started in the gold market and I look at Los Azules, and if I were to turn it into a gold equivalent project, it would be equivalent to a 50 million ounce gold deposit with cash costs of under 1,300 and all-in sustaining under 1,700 based on the feasibility numbers. The future will tell if that's achieved. But it's a large deposit, and we own 46% of it. And we're about to take it public, and I think that will improve the value of McEwen Inc. And at the same time, we're looking to double our gold production between now and 2030. So, uh, next slide. Next slide. This is just looking at a macro picture that the gold miners, relative to the gold price, are well behind in terms of performance, and the junior sector is lagging. And as we progress through a bull market in gold, the juniors tend to perform very well, outperforming the seniors and possibly the price of gold. Next slide. Uh, Mining stocks are underowned, remain underowned. If you look back during the 1950s and also at the beginning of the 1900s, you had ownership levels where mining stocks were 10 to 11%, and today we're down around 2-3%. I believe we're moving into a market that's going to favor hard assets. Next slide. This just a historical chart going back 130 years, looking at gold relative to the Dow. Uh, there have been 3 occasions in which gold could purchase the Dow for 1 ounce, as you can see on the bottom of the slide. And I think at some point in the future, we will see the 1 or 2 ounces will buy the Dow again. Next slide. Here you can see the performance from 2006 forward, and you can see how gold has outperformed the Dow by a significant margin. And I suspect that's going to continue. Next slide. Next. Okay, this is just looking at McEwen Inc., MUX, and its performance since September of 2022 when we closed the financing to move our Los Azules project forward. As John mentioned, during that period to today, we gained some global shareholders, Stellantis and Rio Tinto, and gave credit to our copper project. And then our gold assets started to perform after missing on guidance for a number of years. And you can see how we've outperformed gold, silver, copper, NASDAQ, Dow, GDX, GDXJ by a significant margin. And I think that's just starting. Next slide. Our assets are spread across the Americas, an underground gold mine in Timmins, Ontario, Canada. We picked up a property, was a former producer in the adjoining province of Manitoba, which we hope to bring into production in the next year and a half. We have open pit gold mine in Nevada, where we've purchased some additional properties that are will extend the life of the mine. We have a I call it a greenfield at the moment, copper project in Nevada. And then in Mexico, we're restarting an open pit gold silver mine. In the bottom of Argentina, we have a joint venture, 49% interest in an underground gold silver mine, and it's just starting to pay dividends again. And in the higher up in Argentina, we have Los Azules, which Mike will talk about in a moment. Next slide. So some of the catalysts, we expect to have an IPO for the copper project this fall, and in final investment decision coinciding with that. We have production growth in the gold assets, a doubling, and we continue to spend a lot of money on exploration to extend the life of our assets. Next slide. And you can see our targeted gold production by 2030. There are a number of contributors to that. It is just, we're looking to go 250 to 300,000 ounces. Next slide. And important to consider there is cash flow. We looked at two scenarios here, a $4,000 gold price and a $5,000 gold price. And you can see the impact on our free cash flow. The diamond shapes reflect the capex that will be required during those periods. Next slide. Total gold resources right now are 5.8 million plus about 37 million silver ounces. I expect the silver to go up. That's primarily from our Mexican property where that growth will occur, but it's also being contributed by our San Jose mine in southern Argentina. Next slide. If we just move here, next slide. So I'll ask Mike to pick up from this point. You're silent, Mike.
Sure, thank you, Rob. And it's a pleasure to be with you again, John. Thanks for that opportunity. So what does Los Azules offer? Los Azules offer a tier 1 scale. Depends a little bit on how you count. We are a top 10 project with about 36 billion pounds of copper resource. We have, since the beginning, aimed for a renewable power design. No tailings dam risk. We are going to produce copper cathodes in the Andes. That means directly industrializable copper that can also flow into Western supply chains without the need of being refined. That's kind of important, especially for some jurisdictions where there is where there's a surplus on concentrate and not enough smelting capacity, such as North America. We have strategic investors, and I've been very happy to bring on Newton, which is the technology arm of Rio Tinto at the time, and that enabled the investment of Rio Tinto and Stellantis. And we think that we'll be entering the production in a time when there is a significant forecast supply deficit. So on the next slide, what you can see is the current shareholding. So McEwen Inc. owns 46.3% of McEwen Copper. Stellantis owns about 18.2%, Rio Tinto about 17.2%, Rob McEwen owns about 13%, the Victor Smorgon Group, family office in Australia, 3%, and others about 2.3%. And McEwen Copper owns 100% of the large-scale Los Azules project in Argentina. On the next slide, what you can see is how it scales. Yeah, I mean, if you look at it with today's prices, then if we look at, for example, $6.20, $6.30, then we have a $7.2 billion plus NPV, over 30% IRR, and the payback that is significantly below 3 years. with the gross profit margin that is in the area of tech companies. We have done our feasibility at 435. The all-in sustaining cost is $2.11. Cash cost is 171. So that means that we have a project that is very well protected to the downside and gives an enormous leverage to the upside. On the next slide, what you can see is our timeline to production. We are currently in 2026. In 2025, we put out the feasibility. We obtained the RIGI, the Large Infrastructure Investment Incentive Regime Stability Agreement in Argentina. So far, we're the only copper company that has filed and has obtained that in Argentina. And we have also our environmental permit, the most important permit for construction and future operation. Now we're in detailed engineering. We're working on the sectorial permits, and we want to get to a stage where we can make the final investment decision by the end of this year and start construction early 2027. We envision a 33 months build, a peak of about 5,000 people working, and we'll focusing also on the required infrastructure to put this mine into production. We would like to commission the mine in the future in 2030, where we also produce the first cathode and then ramp up to capacity. First 5-year production is 205,000 metric tons, or about 450 million pounds of copper. Then 148,000 tons, about 326 million pounds of copper average over a 21-year mine life or 22-year production life, with the potential to expand either through Newton or other means another 33 years. And we remain always open to have a concentrate at a later point in time, if that makes sense. On the next slide is the project overview. I gave you the headline figures already. About 36 billion pounds of copper, 205,000 metric tons of yearly production, 20-year life of mine, 22-year life of production, 171 C1 costs, and $2.11 per pound all-in sustaining, and initial capital relatively low as compared to the other projects in Argentina, with about $3.2 billion. On the next slide, our environmental credibilities. We have designed Los Azules to be very, very low carbon. We are at the moment in the 6th percentile in terms of carbon intensity, basically through the sourcing of renewable energy in collaboration with YPF Energy in Argentina, hydro, solar, and wind. We mentioned before we don't have a tailings dam, therefore no tailings dam risks. And we have a strong community and government outreach program. Our environmental impact assessment was approved by 14 organizations, and at the moment with the IFC on our auditing of the IFC performance standards compliance. On the next slide. This is a summary on what is Newton. Newton is the technology arm of Rio Tinto and focused on heap leaching of low-grade sulfides. And we have done significant test work over the last, now already 4 years with Newton. And according to the information that we put out also in our feasibility, we imagine that it can add at least an additional 33 years to the mine. That's about 157% of additional production. Another 2.4 billion tons of ore. That means another 141,000 metric tons production, or about 311 million pounds of production per year average over this 33-year life of the mine, with a recovery of about 76% on the sulfides. Next slide, please. So with this, I hand back to Rob again. Thank you so much.
Thanks, Mike. Well, here just right now, my investment would be aligned with our shareholders. Between McEwen Copper and McEwen Inc., my the cost of my personal investment is $290 million. Take $1 a year. Had good fortune with Mother Nature when building Gold Corp, when we grew from 50 million to 8 billion market cap. McEwen Mining, I thought, let's see if we can do that again. The driver for Gold Corp was the Red Lake mine. It was through exploration, it became a very large producer of gold. It was an asset that was ignored in the market at the time, and became very prominent afterwards. And I'd say Los Azules is another, I'd call it a world-class asset. And we're looking to maximize the value of it for our shareholders. I'd like to see that 290 go up by at least 4x before we're through here. Next slide. This, John, do we have time for a video?
Certainly.
Okay. This, Mike talked about...
The speaker following you postponed due to a schedule issue.
Yes.
So you can run over an hour if you want. I'm good.
All right. Thank you, John. I just wanted to share with you a video. It's a 5-minute video of what we have planned for Los Azules. I think it's very important that the mining industry go out and convince the public that we're doing a better job of protecting the environment. This will be a new model for mines in the future.
McEwen Copper is planning the world's first regenerative copper mine in Argentina. It goes without saying that we need to transform industry to provide us with the materials we need for a renewable society, but without the historic legacy of environmental damage. Copper is one resource that will only grow in importance as we replace fossil fuels with a decarbonized world. Electric cars, wind turbines, batteries, solar panels, and the computers that power everything all require copper. And that copper needs to be green copper, carbon neutral and ecologically responsible. When we started the project, we began by drafting a set of principles for the project that would guide the team in its decision-making and approach. We did this work informed by the place itself. The Andes are an incredibly beautiful and sensitive ecosystem, so we knew it was our duty to be stewards of this place, protecting habitat, glaciers, water, and life itself, while at the same time getting the copper resources that we need. So we've been thinking carefully about the future first and our eventual legacy. We then focused on the people, the miners, and the community itself. And we've been working to create a new kind of experience for people that live in San Juan and the surroundings. Over the life of mine, over 1,000 high-quality local jobs will be created. And these will be jobs unlike any others in the industry. We think people will covet working for McEwen Copper because not only do we focus on safety, but also on dignity and livability, creating a mining facility that is an oasis in the sky. Here is our vision for the mine camp of the future. Beautiful, inspiring, and bold. A biosphere of health and life. After a long day of work, our people will return to a place completely powered by the sun and creating ideal conditions for rest, sleep, recuperation, and the daily needs of miners. Imagine a place that grows its own food, collects and treats its own water, and generates energy without emissions on a giant solar super roof. We are placing specific emphasis on indoor air quality, acoustics, and stress reduction with a focus on social justice, equity, and even beauty within a mind setting. This will be a place to live and thrive while earning a living. We're designing an ecological water treatment valley that not only completely protects downstream water quality, but allows for the creation of new habitat and the enhancement of vegas. Partnerships with local universities and scientists will see new advances in natural phytoremediation, water treatment, and ecological testing to ensure that water is always pure and healthy. Our entire mine operation will be powered by on-site and off-site solar farms, generating all electricity without carbon emissions. Wherever possible, conveyors and fleet facilities will be electrified and plugged into this network of clean energy with batteries instead of diesel for backup generation. At Los Azules, we are not building a mill. Instead, we are advancing heap leaching techniques to extract metals chemically and in a completely closed-loop process with radical reductions in energy and water requirements as a result. And finally, a state-of-the-art, renewably powered electrowinning facility will produce pure copper, so that from the pit to the product, our investors and customers know that sustainability informed every single step, and they can count on that for their own ESG goal setting. Our planning process continues, and we look forward to sharing more innovations as we develop this amazing project further. At McEwen Copper, we are striving to deliver the world's greenest supply of copper in the world's first regenerative copper mine.
So when you look at the copper project and you think of public's opinion and gaining social license, it's harder and harder to get a permit to build a mine. In this part of Argentina, your high desert, water is a large critical item. And we chose to go to a heat process for several reasons. One, it reduces copper. If you were to look at a conventional copper mine of a comparable size, we'd be using less than a quarter of the water. As Mike said, we'd be using less than a tenth, emitting less than a tenth of the carbon. And we'd have no tailings to threaten downstream communities. And that was a really big issue, because when we looked at having a mill there, that situation, we would have a tailings dam that was about 300 meters tall in an area that is seismically active, in an area where we're at the headwaters of a tributary to the river that flows through the capital. It just seemed like a very bad idea to think of trying to put a mill producing tailings in that area and expecting to get it permitted. So today it's a project we're really excited about moving forward on. Coming back to McEwen Inc., right now balance sheet's in good shape. Recently, 56 million. We just got a dividend of about just shy of 50 million. So the cash balance currently is just around 85, 90 million dollars. We have 130 million in debt. 110 of that is a convertible debenture. And we did that because we could push the conversion price much higher. It's called a capped call convertible debenture. You can see the ownership structure and where we are. Next slide. We've done some internal calculations looking at what McEwen could be worth. We have our 46% interest in McEwen Copper. We've priced that relative to some neighboring copper deposits that have had some public market action. Lundin and BHP, their Filo and Jose Maria properties. We have a portfolio of royalties, none of which are performing at this point. But the largest one is a 1.25% royalty on Los Azules. We valued all of those at about 35 million, and you can see the per share value. The Los Azules royalty, based on the feasibility, would generate just under $500 million over the life of the 21-year life of the mine. And then we have compared to a peer group of gold producers, gold and silver producers, looking at a 50% discount and a 50% premium to that average. And we come up with a price of, you can see the high and the low price and where our current price is today. We think there's considerable room on the upside. Next slide. Already said my personal investment and my compensation. Next slide. And these are some of the catalysts that we see, the construction decision and financing of Los Azules for the CapEx. We think the copper price has got some room on the upside, given all the new demands. We're looking at building our gold production and our exploration. Next slide. And then we're into an appendix if you have any questions.
Everyone on the webcast is invited to submit questions through the question box. Rob, I feel a little bit out of date. Things are changing or growing so quickly at McEwen Inc. There's 4 assets, 3 in Nevada, 1 in Manitoba, that I'm less aware of. Could you tell us how much you paid for Elder Creek Copper, Windfall Canyon Gold, and Lookout Mountain Gold in Nevada, and the Tartan Gold Project in Manitoba?
That's a good question, John. I don't have those numbers off my head, but there wouldn't be more than in Nevada. We bought Timberline Resources, then we bought Golden Lake recently. Timberline was last summer, and Golden Lake was just earlier this year. That wouldn't be more than $40 million. And Tartan in Manitoba would be about the same at the time. And all of those, the ones in Nevada, are relatively close to our existing Gold Bar property, about 30 miles away. They're a historic mining district. I-80 is immediately to the north of us. Northern Peak north is in the middle. It was a gold, silver, and base metal, lead, zinc area. Some great gold grades. We think since it was mined, we're going through the permitting process. We hope to get a permit in the next year and a half. And we may build a heap leach process there rather than trucking it to our facility at Gold Bar. Tartan is second lowest electricity costs in Canada. It was a former producer, so there's a road in there, power going in. It's near a community called Flin Flon, where Hudbay had a large operation. There's an existing labor force there that's looking for more employment. The municipal government's very supportive. We'll have a pre-feasibility out on that in about a year's time or less. We think it's good widths, reasonable grade. We're getting some good exploration results there and also in Nevada. So it was all about how could we extend the life of our existing operations using the same base of operations for us.
And the Elder Creek is an exploration project where you didn't pay a big cash up front.
No, Elder Creek came when we merged with, that was an early merger with, I think it was when we were first forming US Gold. So we've been sitting on that for a while. It's in a copper gold district in Nevada. It has some interesting showings. It just, we haven't been exploring there for a while. We've been concentrating on Los Azules.
In terms of completing the projects to double the gold output, do you have an idea of what the range of CapEx cost would be?
You're looking at Gray Fox, which we just announced. That was 180 million.
Is that spent?
Sorry?
Is that spent or ahead, behind you or ahead of you?
Ahead of us. And so that's Gray Fox. Tartan, we're thinking it's in the neighborhood of around 50. Mexico's 20. And then Stock, where we're driving a ramp down, that'll be in the 40 million range. And we feel through our cash flow, assuming the metal prices stay above $4,000 gold and $50 silver, that we're largely self-funded. As I said, we just recently got a dividend from our San Jose mine in Argentina, and that was 48 million. And then earlier this year, we had 8.8 million. I don't expect that stream of dividends to continue at that rate, but they were sitting on a lot, and they resolved to pay out 90% of their profits to the partners, Hochschild and ourselves.
How much do you think Windfall Canyon and Lookout Mountain might be?
That's we haven't articulated that number yet. We're still exploring it to see what size it could be.
Rob, I was mentioning earlier in sleepy Pittsburgh, Nippon Steel has doubled their CapEx estimate from 1 billion to 2.5 billion for replacing the 1938 hot strip mill and modernizing the Mon Valley Works. That's very notable because it isn't Western Canada near the oil sands where Agnico is spending 2.4 billion to finish Hope Bay.
Mm-hmm.
It appears as though construction inflation is not just in hot mining camps. How much of a buffer do you have if some of these things cost a little more?
Mike, do you want to talk about contingency at Los Azules? That's high mountain. I'll start at the highest elevation.
I mean, we had developed Los Azules in alliance with the 43101 and SK1300 subnets. So that's what was included at the time. And what we are now doing is a capital cost estimate, plus minus 10%. And so far, it looks like as the CapEx estimate that we had in the feasibility, which was 3.2 billion, is holding up those numbers. So yeah, that's pretty much it.
I think, John, you're seeing inflation on a number of fronts. One, consumables, your structural assets, and your labor force. There's a shortage there as well. So there's I think you have to include something like a 20% contingency to be close on your numbers.
At what price does your debt convert to equity?
Right now it's at 17. When we issued it, we were trading at $8. And in a normal convertible, you get about a 30% premium. We were able to, using this capped call, get up to $17. And the capped call has a value right now of around $60 million, the call options. So we could retire it with cash or with, not all cash, that's for sure, but a certain portion of it with cash and then issuing shares at 17.
What is the maturity of the debt?
It was a 5-year term. We did it last year, so 30.
Which month?
Be January or February.
Do you think that you have too many balls in the air, or are you amenable to adding another asset if opportunities arise, Rob?
I'd like to have more exposure to gold. If an opportunity arose, I'd certainly look at it if it was priced right. I don't think we're going to see inflation go away. And I do think gold will continue to be in demand.
How do you interpret the decline in the gold market since the Iran war, roughly 20%, and the decline in silver from its peak above $100 an ounce?
On the gold, there were a couple of sellers in the market. Turkey was selling. I don't know of other players that were selling, but we had a squeeze in the market. And one of the beauties of gold is that you can sell and get your money in 2 days. So that's one of the functions of gold that is accepted around the world, and that liquidity is there. I think it just got carried away. There was a rush in silver and a rush in gold. They thought that the Middle East was going to blow up. It hasn't yet. But I think it just needs to consolidate before heading higher. I've been holding gold for a very long time, and it's served the holders of gold quite well if they're long term in their view.
Michael, talk about the building blocks of the CapEx budget and construction for Los Azules, and which have the greater risk of delay or capital cost overrun.
So remember that we had about 3.2 billion on the capex estimate in the fees. In between mining fleet and stripping, we talk about $1 billion. And then in between asset plant, so in between crushing, primary, secondary agglomeration, stacking, asset plant, and everything that's required for the SXEW and the SXEW, we talk about 400. And then the rest is basically supporting infrastructure. Yeah. How are we going to manage the capex within what we think is reasonable? Is basically we have built in Argentina a very, very strong team. and we have lots of people with in-province experience in high-altitude construction activities, in engineering and construction activities, in operations, and that others at this point in time don't have. And I think that uniquely positions us to also think about a split approach in between an EPCM and self-perform on some of the construction activities. We believe, for example, that the leach pad, the road, some major earthworks, some of the supporting infrastructure, the energy line we do with an external partner, we can supervise, we can do that on our own. Whereas for some activities, we believe in an EPCM model. So it's basically a split approach. Then what are the typical issues when you have large scale infrastructure developments and cost overruns? Is that you have lots of changes in the team. We are running with a team now that is consistent over 4 years. Yeah. So that is going quite well. Then we stick to the scope that we have defined in the feasibility, which is a typical other overrun item. And I would say then it comes down to having the right level of the capex cost estimate, the right level of project controls going forward, and also the right level of thinking when it comes to Argentina. I mean, yes, we have the RIGI, but Argentina still has, I would say, has some ways to go. And whenever we plan for something, we have a plan A, a plan B, a plan C, a plan D, and a plan E to make sure that we perform to our expectations, perform to the different plans, and have optionality built in. Yeah, I mean, if the road alignment a certain way doesn't work well, we already have another one in place. If a certain routing for the energy line doesn't work well, we have a second approach in place, up to the point where we lock it down and starting the permitting and construction process, from which on we are very rigid when it comes to scope changes.
Michael, I want to make sure I understood you correctly. So may I repeat what I think I understood?
Yep.
1 billion is for pre-stripping and mine fleet.
Yep.
400 million is for heap leach and processing.
Yep. Yeah, the heap leaching is not included in that number. The heap leaching, so the actual heap leach itself is not included in this in the figure.
So that's for acid plant and processing.
Yeah, so it's everything from crushing and conveying to processing and stacking.
How much is the refinery?
There's no refinery. The SXEW directly produces copper cathodes.
So
that's the benefit of the setup.
The SXEW is included in the 400 million.
That's correct.
How much is the solar and electricity generation?
We do not have, besides the roofs that you saw on the camp, the energy generation and the supply of renewable energy is included in the PPA, in the power purchase agreement, as part of the fees.
So the solar is paid for by the supplier.
I mean, ultimately, you pay through the supply cost and the actual energy cost.
Do you want to explain YPF? Mike, just YPF, sorry? The agreement we have with YPF.
That's correct.
No, do you want to describe it?
So the idea from the start for our project was to have a project with a very small environmental footprint. That's why we selected the heap leaching, and we directly went for, okay, how can we make this project be producing in the future copper cathodes that are carbon neutral And a big anchor is obviously 100% renewable energy. So about 2.5 years ago, we contacted YPF Energy, one of the energy suppliers, main energy suppliers in Argentina. We signed the first memorandum of understanding on providing us with the energy, and then we worked. After about a year, we worked on the second one, and the second one, what we have is offered us to not only provide the energy, but to do the engineering, environmental permit application for the energy line, the construction, the financing of the construction, and would basically charge us the energy combined with the repayment of the capex over, I believe it was 15 years.
How much of the capex is the mine camp with the beautiful architectural designs, etc.?
It sits in the PEA. It was sitting at about $196 million. And in the feasibility, it wasn't included as it comes at a later point in time, and we're currently doing the detailed engineering. And the PEA was also coming in, I believe, in year 5 or 6 as sustaining capital.
Once again, we invite questions from the webcast. Once the IPO is in place for McEwen Copper, it's self-financing. And if there were to be capital overruns, McEwen Copper could raise stock or borrow money itself. And it would not be consolidated since you're down to 46.3%.
Bless you.
You envision McEwen Inc. holding the McEwen Copper shares as a long-term investment, or is that a source of capital that might be used to grow in gold and silver?
Well, the whole point of putting the copper assets into the sub and McEwen Copper was to elevate the profile of that and go from a private market valuation to a public market valuation. I suppose there could be a time in the future that we could sell that and use those proceeds to expand the gold if there was an opportunity out there we saw attract. But right now you're looking at a very long life, relatively low cost source of production that if you assume the current copper price stays where it is and our costs are held at the feasibility level, you have a 72% gross margin there. There'll be room for a dividend stream coming out of that asset for a number of years. So I think it's a good long-term asset, but you know, circumstances can change. It depends on the price.
So Hudbay is buying Arizona Sonoran Copper for $1.48 billion. How would you compare the size and value of Los Azules to that transaction?
That's an excellent question. I haven't done that comparison. The reference point I've used, John, for value is what BHP and Lundin came up with for their projects in the same province we're in Argentina as Los Azules. And we were looking at values there. That was a $4.5 billion value they put on that project. I'd say we're at least half of that. We're at a lower altitude. I mean, the top end of Philo is equivalent to the altitude of Base Camp Everest. They're bringing water up from the Pacific, or proposing to. They've got, they're building a mill. There's a lot more capital intensity there. We'd be doing, I don't know what Sonora is going to be producing. Will be the first 5 years we're looking at 205,000 tons, or 450 million pounds of copper. So I'd say our value is nicely north of 2 billion. Right now, on the last financing we did, $30 a share, it had an implied value of 30. At $30 a share, it was just under $1 billion, 984 million. We'd be in the second lowest cost quartile. As I said, long life. There's possibly a premium for environmental conservation, protection. It's just, and we're on a large property package with a couple of porphyry targets identified.
There used to be a very good company in Toronto run by a guy named Jerry Heffernan 30 to 50 years ago called Coast Steel Inc.
Yes.
That built steel mini mills like Nucor.
Yes.
And sometimes they sold them, and sometimes they kept them and operated them as steel mills. They eventually sold out to what became Gerdau.
Mm-hmm.
And Grupo Mexico has a big construction division in Mexico, utilizing the skills they require simply to build and maintain their copper projects.
Mm-hmm.
Your environmental designs are most innovative, and frankly, some of the mining companies aren't very good or don't possess the creativity you display in your video.
Mm-hmm.
Do you think it makes sense for McEwen Inc. to have a services division where you design and build projects or help build projects? You know, these EPCM companies make a lot of money, and the poor bastards that are the operators pay the bills.
If I may say something to that, Ron.
Go ahead, Mike.
So I think what you saw from us, I mean, our approach is exactly that. I mean, we split where we think we have the capability versus we split where we think an EPCM is performing best. And if we look at companies such as at First Quantum, what they have done over the years is they have built teams that have built mines. And I think that independent of some other issues, but they have shown that they've been able to build a very, very big mine in Panama, and have shown that they can build something where others haven't been able to do that, and they have been able to do that through consistent, I would say, management of the team, in-house grooming, in-house development of their people, and maintaining that team going through several projects. And when you look at the typical big mining project, the typical big mining companies, very often what the companies try to do is they try to outsource the risk to the EPCM, but typically that doesn't work. Yeah, and that's also something to what we ascribe to. We think that there are certain things that an EPCM can do better, but there are certain things that when you have the right people in place, you are more efficiently and effectively able to do on the ground.
Agnico is its own EPCM, and they're still spending a fortune, $2.4 billion for 6,000 ton a day, 100 miles north of the Arctic Circle in Nunavut.
I cannot comment on Agnico. I was more focused on copper and large scale copper projects.
So one of these EPCM companies, the guy has a yacht called Change Order.
That's where he makes his money, isn't it? By
So Rob, I'm just rooting for you and Mike to each have a yacht called Change Order, being on the other side of the equation.
well, hopefully it'll be called no change order.
No, that is what when you ask me how we're going to manage the capex is exactly one of the things. I mean, what you want to make sure is that you have a good level of engineering when you start construction, and that you stick to your scope as ironclad as possible, because that's typically how not only EPCMs are making their money, but also construction companies. Yeah, the actual contractor that is then executing the work.
Very good. Very good. Well, I'm just so impressed at the advancing of these new assets we didn't have to talk about last year. And McEwen Copper on the verge of the IPO. And I'm so happy for your progress.
Thank you, John. Thank you for the opportunity to tell the story.
And thank you
Thank you, John.
for your attention. And the replays are available on our Go to Stage channel, like a YouTube channel.
All right.
Very good. Thank you very much.
Thank you, John.
Thank
Be
you.
well.
Bye.
All.